Chainlink against the US dollar on the weekly chart to start us off with. We're going to look at Fibonacci extension levels today. We can also look at where each top would be and why you could draw it from different places and get different meanings. Also, we're going to look at the log scale versus linear scale and show you how to set these up so you're not getting inaccurate information. Okay, so this is on a log scale, Fibonacci extension. You know it's an extension if you got all the rest of the numbers on the top. It's a retracement if you set it up and you got more stuff down here, right? So this is an extension. You draw the fib extension by starting at your swing high and going to your swing low. And you don't have so look at the chart in front of you. Okay, let's do an example. So we have this set up here. Now, do you see any like exact levels? Well, you maybe got something right here, right? But sometimes you need to have a little bit more easily identifiable levels. So this is, although accurate, you're not going to get a lot of help here because maybe it's just too short term. So maybe a coin like Link likes to have a little bit longer term. So you can draw it from your previous all-time high, your really swing high, to your swing low. And then it starts to get a little bit more identifiable for levels here. See this here? So this might be a little bit bigger of a level for Link, right? Anything that has a support and resistance to it, like there's their support, flip to resistance, right? You see that? That could certainly help you a little bit more than the shorter term. So sometimes don't be afraid to, push it back a little bit to your previous high. And the only reason we didn't go here is because it's very similar, right? So even though this is accurate, it might not give you the best information. So you need to be aware of that. And, don't get too tied down to just because you see everyone drawing it from some point doesn't mean it's accurate and or correct, and doesn't mean that you can't have a better levels, right? So you can see this one here. You got your support here. You got resistance here, right? These are a little bit more useful data, if you will, than the local top. Okay, so now let's talk about log scale versus linear scale. So we're on log scale now. A log scale allows you to fit more of the data into the same chart. So if you take it off of log scale, you can see down here, see how much more data you get. It's just it can be useful, but you need to be careful with using it with Fibonacci because log scale versus linear scale has very different levels. Just watch one of these candles. Pick a candle. Let's go to this big one right here, right? You see how it's almost to the 0.5? Okay, watch. You take it off, and it rapidly changes a little bit. And even the numbers change. See the numbers change, right? So how do you know, right? Just right-click. Go to your any of your dots there. Right-click. Go to your settings, which is down here. I promise it's there. Settings, it looks like this. You scroll all the way down. And you do whatever. If you like linear scale, cool. It should default to linear scale, but if not, make sure you have your fib levels based on log scale set right there. You can also change your labels if you like, left, right, center, and then you can also even put where you want your prices, the top, middle, bottom. Just play around with that. If you're new or you didn't even know that existed, right? You can put these numbers above the line, in the middle of the line. I just like in the middle, or below it. And then you could have these numbers even in the middle of your chart. I don't know why you'd want that, but you can also put them over here. I kind of like them better on the left, but sometimes it's hard to see. So my previous videos, I said you could just hide it, right? And you could do that if you prefer the numbers on the left, but just for S&Gs to make it a little bit easier for videos, this does tend to work out better on the right. But so hopefully you're learning something here with fib scales here. Okay, so how about that? So our next level to be looking for on this, if we could somehow take out this 0.236, which would be a pretty big level for Link because, remember, these are weekly candles. So there's a month of support. We broke it, and so far, unable to get back above it. If we do, in fact, close above it, I would expect a nice rally up to the 382, which is right at that $23 level. And again, you're facing previous support, previous resistance. Okay, so those are your two levels to be watching on a little bit bigger time scale. Okay, so let's remove this and let's go look at the Gaussian channel and see if that can help us with anything further. Okay, so we have the weekly Gaussian channel, right? The big picture for Link. We've been a low on the weekly Gaussian. We've even been red, okay? We're not quite red yet. Hopefully we don't turn red. But you can see that Link has been kind of unfazed by the red. We stayed in here for a couple months. but then as soon as you turn back green, if your price action starts coming up here, you could probably expect some good things. Not just Chainlink, but with all coins in general. So we're at the bottom of the weekly Gaussian channel now. We usually focus on the 5-day. We've even wicked outside of the weekly, which we've never done historically on Chainlink against the US dollar, right? So Link doesn't have 10 years of history, but in the history we do have, this is a first. Usually, if you had the choice to buy when it's making all-time highs or all-time lows, what would you rather buy at? Okay, so not financial advice, but usually buying at the bottom of the Gaussian channel, weekly, a 5-day, usually better than buying near the top. So most people that are frustrated with Link right now tend to have bought, up in these areas after massive rallies. That's usually when the majority of people tend to buy when everyone's talking about it, and it seems like no bottom is ever coming, only up, right? That's when you tend to want to get out. And usually when everyone says dead coin and Link's going nowhere, or any coin's going nowhere, and get out of it, it's dead. Those are usually the times that, in a year from now, maybe not in the next 4 seconds or 4 minutes or 4 months, but 6 months, 12 months, 18 months, these levels will be well appreciated. I'm pretty confident in that. So yeah, we're red again, right? We've been red before, no biggie. Couple months before, who knows how long this is going to happen. It's only happened one point in history. So if you had 10 data points saying anytime Link turned red, we stayed red for a year or a month or a day, right? You'd have more confluence. But the fact that it's only happened once, it's not going to be much of a help. And anything that's happened in the past does not have to repeat in the future. So we're here. We're under it. We haven't been under it and ever. Let's zoom out again and make you dizzy as hell. But we've been down. We've been down here for a couple times. Bottom, come back out, hit the top, come back out, hit the bottom. Back in 2018 bear market, right? So we're here again, and but we've been down here for a while, right? We've been down here long. There's a bottom and a rally, hit the top, rejection, come down, try to hold the median line, rally again, rejection again, and back down. When you're not able to get out of the Gaussian channel in a timely fashion, it tends to act as just like quicksand, right? So that's where we are, and that's what it be. Until we can get back up in here and start making a rally towards this $25 level, the median on the 5-day, we're in a little bit of sideways handcuff action, okay? The daily, let's go look at the daily, right? We're under the daily. So I don't recommend using the daily, but it can be like a little quick flash, right? It's got too many fake outs, right? As you can see. But if we want to turn more bullish, we got to get back in the channel on the daily as well. So this could be step 1, right? We even rejected off the bottom of it just last week, right? So next time when we come up to it, we'll see where we are. It should be around $18 in the next couple days. So we will see. Now, let's talk about one more thing where I've been asked, by a lot of people, where would you be buying Chainlink? Well, dollar cost averaging is your best friend. Not financial advice. You can do what you want. Nothing I say is financial advice, just my own opinion. But for me, buying at low levels, like I said, are historic lows. Things have never happened when people are, rampant fear everywhere. Everyone's dead, calling coins dead. Those are usually the times that you want to buy, right? Everyone loves quoting the Warren Buffett, the great quote of, be greedy when others are fearful and fearful when others are greedy. But this is exactly what he's talking about, okay? It's not just a slogan that you say at all-time highs. You're at the lows here. Everyone is fearful. What he means by that is buying or selling, right? And so let's get down to brass tacks here, okay? So on the daily chart, where are we? We're at around 17, right? I don't know if we're going up, if the bottom's in. If we are, fortunate or unfortunate enough to come back down to this 1350 level, right? So say we come back down here and everyone's scared to hell that we're going to negative $17, okay? Which there'll be whatever numbers called for if we come back down here again. This is a huge opportunity for you. So if you're waiting to buy, you can either start buying here and then add more as we go down, or if you want to wait and just try to risk it for the biscuit, let me show you something here. So you can put your order in, say right around maybe $14, right? So maybe you go 14 and you put a stop loss. Stop loss is your best friend. Right under this. I would even go like maybe under this wick right here. See this wick set way back in January 2021? So you put your stop loss right back where there's absolutely no more support. If we lose this level, so say this 1229, so you might get a wick, right? A lower wick like this did, right? There's a wick, double bottom, and we wick just slightly under it, right? How much did that go under it? So roughly about 10%, okay? So I would go 9 or 10% under this level. Same thing, right? Let's see where that would get us. 9, 10%. What do you know? Right about the same level as being underneath this wick right here. That was kind of our massive pullback that we had, right? We had a huge rally back in December 2020, all the way up over 115% almost in just less than 3 weeks. And then we went kaput all the way down over 32% in just a couple days, right? And then that wick stopped out right there. So if you want to put a buy order in here, put your stop loss order in about 10% less than that, you're only risking 10% of your capital to potentially make 30 million%, right? Because if that's the bottom, then you only have upside to go, right? You want to have your risk reward ratios maximized, and this will be it. Because all you're going to lose is up to 10%. If we lose this level, yeah, we're probably going significantly lower. How significantly lower? Well, you're probably looking at these levels back in here. To be frank, or Shirley, or whatever you want to call me, you're probably looking at something in this level, because that's just how it be, what it do. Okay, so I would look somewhere between 9 and 7. Just throw that out there. And that's not saying that we're going there, right? I'm not saying we're doing that. I'm saying big ifs, right? So that is a substantially lower, right? So say you bought your order in here and you didn't put a stop loss. Well, shit, you could be down another 50% than what you're at now. Okay, you don't want to do that. If you get stopped out right here, right, then you can be pretty confident that you're going back down this level, and then get your buy orders ready for down here. Then you could, by the time you get back up here, look, you got 60% profits back already, all right? So that's how you do it. That's how smart money does it. That's how I recommend you do it. We're on a little bit of a rant here, but hopefully I'm trying to help some people here, because I know a lot of people that follow me are into Link, right? We got the damn sign. I get it. So let me know if you have any questions. I'm happy to help you. Join the Telegram. I do my best to help answer extra stuff in there. If you want more help in this, identifying, how to become a better trader yourself, that's what Patreon's for. So click that link and join us in there. I got a great bunch of people, about 40 people in there that are, I think, like it. They tend not leave very often, but if you want to learn more, that's what that is for. Simply, case in point, I'm active in there, post a lot of different stuff in there every day. So check it out if you're interested. Otherwise, just leave me a thumbs up, and I appreciate you. Crypto Fear and Greed Index, we're still in fear, if you can believe it or not. We got out of it briefly, but now we're back in fear. So what we want to look for is obviously prices to go up, and then this should go up. So if we take out 54 and we print a 55 or higher, then I would say the likelihood of prices increasing over the next week or 2 weeks is probably pretty good. All right. Let's look at the quote of the day by Mr. John F. Kennedy. Too often, we enjoy the comfort of opinion without the discomfort of thought. Let me know what you think that means. Or you just think about it and keep it to yourself. Deep thoughts. Car of the day, Aston Martin DBX. It's the Honda CR-V with a 1 in front of it. But 1 in front of it's because it's like 150K or 200K, depending on what market you're in. DBX looks awesome. I love Aston Martin, but I don't know if it's fancy enough for 150K. What do you think? I love the lights. I love the rear, but man, I'm going to pay 100K extra for a cool taillight. All right. I'll see you on the next one. Tom Hanks is taking you to Flavortown. Good luck. You may never come back.